In this video, I'd like to go over our FX IntelliTrend Fast. This is very similar to our other IntelliTrend. However, it's designed for traders who want to scalp and to find the latest opportunities in real time. Oftentimes, new trends are spotted within 5 minutes of the beginning. To add this to your chart, you want to right-click on the chart, chart settings, add script, and go down to FX IntelliTrend Fast histogram, and it gives you one option to adjust in here, and this is the moving average percentage. We statistically compare the euro to all the other pairs: the dollar, the yen, the Swiss, the pound, the CAD, Australian, New Zealand, and we do the same thing with the dollar. And this looks at a 1 minute 180 period moving average and the percentage of currencies above and below that. We also use three other statistical tools: FX tipping point and FX momentum, which are some of our newer tools, and they work so well that we decided to create one tool from multiple ones and average all the different statistical trend tools into one simple to read and very, very fast indicator. So once you add this to your chart, you're going to see real-time strength and weakness on the bottom, and this compares again the currency to all the other ones. So as this is going sideways right here, you want to basically analyze every little swing and see if the up moves have more intensity than the down moves. Let's zoom in on this to show how it works. I'd like you to watch one of our other videos, the FX IntelliTrend Currency Meter, to see how this technology helps you spot the strongest and weakest pairs. This one's kind of going sideways right here. You still want to use common sense trading methods like buying pullbacks and strong trends, or selling up moves and down trends and breakouts of very narrow sideways range. So once you're possibly short right here, notice initially there's quite a bit of weakness coming in, and then it all but disappears, telling you that the downwards momentum is possibly over. So you might want to either move your stop to break even or exit with a small 10 or 20 pip profit. If you believe the euro is going to go up, you might buy the breakout of this 30-minute sideways range, and you can see initially some strength comes in there, and then it all but falls away again. So that moves over. And if you decided to short again, notice on the down move, there's much more intensity to the downside than the up, and once the lows are made, typically you spot the opposite. Like for instance right here, explosive move up with a lot of momentum. During the pullback, there was a lot less weakness on the way up, and as the bars go green right here, you might have got into this trade. Now, the euro dollar was one of the choppier pairs today. Let's show this in its best light, using the currency meter. The New Zealand was one of the strongest pairs today, and the pound was one of the weakest. Let's look at the pound New Zealand and how this tool works. First of all, the market's kind of going sideways and then it breaks down. Notice all the explosive weakness. On the few up moves, very little strength. And so this is basically how you're going to want to use it on a daily basis. Let me just give you a little view of what this looks like in the currency meter format. We have this set up for each individual currency, and starting around 7, the New Zealand really became one of the strongest pairs, and the pound was consistently the weakest one all day. I'll bring that up so you can see it as well. This is a real-time tool. It's far faster than our other IntelliTrend, and the pros of that is it helps you spot new trends almost immediately. The downsides of that are, you have a little bit of intense weakness followed by almost no strength, followed by usually resumption of the previous trend. And in the currency meter version of this, we also have underneath it the daily, weekly, monthly trend. The pound on every time frame was weak today. The New Zealand on every time frame was strong, from monthly, weekly, and daily trend, real-time trend on both. And that's one of the reasons why this trade works so well, and it fell 100, 200, 250 pips. I showed it on the euro, and the euro was very choppy today with some strength. In other words, there was some strength in the euro today, but also strength in the dollar. So that's going to cause a lot of choppiness. You really want to use our statistical tools and focus on the pairs that are most likely to go one direction. If it's strong, it tends to just go up, and if it's weak, like you see in this example, it just tends to go down. Today happened to be one of those days where the euro dollar didn't trend when I was doing this video. But you can see this in action watching our forex blog day after day after day, and see how it works in the future on more normal and typical days. You know, a lot of people don't trade the pound New Zealand, but it happened to be one of the strongest, you know, trending ones today. The yen also was extremely strong from about 130 all the way to 6. So let me just show you a pair that maybe more of you would typically trade on an average day. Pound yen. Weak pound, strong yen. You know, it's also very likely to trend down. And you can see that, you know, as it's going sideways right here, other than this one bar, usually you want to wait for either a breakout of a sideways range or a pullback trade. This is an example of a sideways rectangle, you know, wedge shape that broke down and had incredible weakness all the way down to about right here. And then it popped up, and you see the strength came in there immediately. And as it's going sideways right here, this is what we consider a pullback trade. Strong trend, pullback, the upwards move has no weakness. You wait for it to drop down again, you go short, and you can see it fell from 40. Even if you got out of it somewhere down here, you made 60 pips on that trade. Now, I and most of our traders always draw the Fibonacci profit targets to get an idea of where to get out at, and you can see it is exactly where that is right there. Fibonacci profit target to 1.382. I probably would have got out of most of my trade here, and maybe the rest of it here as it came back up, and wouldn't have held for that last move. But notice as this thing continued down in a few instances, very weak trend as it went lower, went up, had a lot of strength right here, and then on this next bar that made slightly higher highs, it didn't have any strength. So this is an example of how you might want to use this tool to pinpoint precise entries. Don't ever short a currency, even if the trend's down after a big strong bar like that. However, if the next bar has almost no strength, you get into it, and initially you can see a lot of weakness, and then the weakness goes down to less than average amount. You have a lot of weakness on this bar, and it's just not able to go lower, so you might, you know, tighten your stops here. And this trade right here, you were in it around 75. You're never going to catch every pip. You might have been out of it here at 50 for a 25 pip profit. And on this move up here, right here, there's not that much strength. So let's say you short it right here. Well, guess what? You know, it's not going down. There's not a whole lot of weakness in this case, so you know it ahead of time, in real time. If there's not a lot of weakness, it's probably not likely to work. The market's already fallen a lot, and as it starts going back up here, you can see, you know, even if on this bar right here, it doesn't look like that much of a bar, but against other currencies, the pound's screaming up, and the yen's getting weaker. And so this tool tells you and lets you see what other currencies are doing. Now, notice there's this bar right here, less weakness or less strength than the strength on that bar, and then the next bar that made a higher high also had very little strength. This is a much bigger pullback to look to go short on, and you can see when you got into that trade, immediately you saw there's incredible weakness, then the weakness started to fall off, you know, down here at the lows. It has no weakness anymore, so you get out. Maybe you got out here at 56, you're short at 77, that's another 20 pip move. And that's how you want to use this in order to trade. You know, and when you focus on the strongest versus the weakest pairs, you tend to do better. Let's look at some other pairs before I end this video, just to show you how this, you know, highlights. This currency right here, the dollar Swiss, went up with a lot of strength. Pullback right here had very little weakness in comparison to the strength. So I wouldn't blame anybody for buying this little breakout right here. And initially on the first bar, you're feeling pretty good about it. But as it's going up, the statistical strength falls off, falls off, falls off. And that tells you that it's not likely to scream up. You might be long this at 85, comes up here 15 pips and starts to come down. You know, so you wouldn't have lost money on that trade, but you certainly didn't, you know, do as well as before. And because the dollar Swiss's longer term trend is down, you might have decided to actually short the highs here because the upwards momentum is slowing down, and you know, you look to go short. And as it starts to fall, notice a lot of weakness comes in until about right here. This is the first green bar, and it's not able to go lower, so you get out. But you made a nice little 20-25 pips in the counter trend. And notice also on this pullback up here, initially a little bit strong, the strength falls off a cliff, and you basically want to just look at every swing. And if the downswings have more weakness than the upswings, you know, when the upwards, the counter trend move up runs out of steam, you look to go short. And then in this case, look, this one falls with incredible weakness, and you know, you might have tightened your stop or got out of half here, and when it came down here, you can see the weakness is kind of running out of steam and you're out. But that was a huge move on that particular trade. But whether you use this to catch the bigger moves of, you know, 20 to 50 pips, or you want to find a bunch of 5 to 15 pip scalps, we teach using tick charts for the precise entry. This is basically to get a feel for which currencies to trade, and to know within a 5 or 10 minute window of when we're approximately going to get in the trade. We use the tick charts for precise entry, which I'll go over in another video. And you can also sign up for our 2 weeks free classes to learn that method. And you can get our software by trading with FXTD, FXCM, forex.com, Allpari. You get the software and the data for free. You only have to trade 10 lots per month. And as you can see today, if you took a trade here with one lot, you made a little bit, it went up here and you shorted it, one lot, it fell 20, 25 pips, you would have made 250 on that trade. That's just 2 lots right there. You take another trade, that's 3 lots. And that's only if you're trading 1 lot per trade. If you trade a half a lot per trade, you only have to do 1 half lot trade every month to get our software and the data for free.